Welcome back. It's time for the roundtable, and this week, two of the best are going to be looking into their crystal ball to predict the economic outlook for 2015. And it was a rough week for the Dow. Investors who so far have loved lower gas prices sent the market plummeting midweek, panicking when the price per barrel of crude fell below $50, only to come racing back with buy orders the next 2 days. And there were encouraging job numbers out Friday, but your paycheck isn't keeping pace. Wages remain flat. And that's not good news for a recovery counting on consumer confidence to really gain steam. So what's hot and what's not in this new economic year? At the roundtable, two regulars, venture capitalist Jonathan Aberman, named by the Washington Business Journal for its Power 100 list, and Barry Glassman, president of Glassman Wealth, picked by Washingtonian magazine as one of the region's top financial advisors. Gentlemen, welcome to you both. Happy New Year. Is it a buy year or a sell year? Barry, I start with you.
Thanks for asking the blunt question. It's going to be a fascinating year. There are three real big elements, two which are brand new that didn't exist when I was on here a year ago. One, Congress. We're likely to see some things passed. I don't know if they'll be vetoed or not, but we're likely to see some things passed.
There will be something that will happen.
Exactly. The second thing is the price of oil and what that's doing. We'll talk a bit about that. And then the third thing is the value of the dollar. That's having an enormous impact on a lot of companies around our country and around the world.
You can take each of those three things and say there's good and bad mixed with them. So get back to the basic question. If someone walks into your office and says, am I buying or am I selling? What are you telling them?
We're remaining diversified. But all three of those things, all three, Congress, oil, and the dollar, have both positive and negative effects. And unlike 2008, when it was all negative, each of these things changing can have a positive impact on certain parts of our economy.
Right. You're the venture capitalist. Tell us where to buy this year and where to sell.
Where to buy? Well, sell Europe. I think, no, seriously, sell Europe. I think that the Germans are going to have their Lehman moment with Greece. I think that Greece and the euro are going to, Greece may end up out of the euro, and it's going to be a crisis and a panic. I'm a big buyer of the United States. I think the United States economy is basically a locomotive for the world now. I think oil is going to be a great thing for the American consumer. It's almost as if there was a massive middle class tax cut. But make no mistake, the Saudis in particular are trying to drive the U.S. oil industry back underground again like they did when they drove the price down to $10 or $20 a barrel 20 or so years ago. And that's the big story, is how it will play out for the United States economy. I believe that if Congress behaves itself and we don't have another shutdown fight, which, by the way, I think we may have, this will turn out to be a great year for the United States economy.
See, I'm from Oklahoma. I know the cost of drilling, and that below $50 a barrel worries me, obviously, for the region I grew up in. They're taking a hit already. But I worry about the ripple effect that we'll have on the national economy if oil prices go too low. Barry, is it more of a win than a loss?
See, it's not that low oil prices have a ripple effect on the economy. It's low oil prices says something really serious about what people, professionals and others, believe we are going to see as far as growth in the U.S. and abroad.
So give you, and that argument, it gives confidence because they like seeing the extra money in their wallets.
Listen, I'm talking about when investors believe that there's not enough growth, that China, emerging markets, and others won't be growing, won't be manufacturing, they're not willing to bid up oil.
Look, here's the thing, right? The United States economy, most of it is driven by consumption. About 10 or so percent is driven by exports. Oil prices are going down for one or two reasons. One, there's too much oil because there's a deflationary spiral in Europe, China's slowing down, Japan's got terrible demographics. Or it's going to be great for the United States economy because it's going to be so wonderful for our consumers, we'll basically be able to drive the world. It's an open question. Just get ready for lots of volatility, but basically be long U.S. assets, long U.S. dollar.
And you and Marisi said a couple of months ago here on this show that you gave a green light for the year ahead for the U.S. economy. Barry, I gave a yellow light. I feel like there are some cautionary flags, but I included things like China slowdown in that. Where do you see cautionary flags in the year ahead?
Well, I also look at sentiment. And when everyone says the United States is the place to be and people hate Europe, we consider that. So something that we look at is If there are European companies that are exporting to the U.S., which is now a positive because they're receiving more money, more currency as the dollar rises, and their energy costs are plummeting, it's such a positive for them, and it can be. Having said that, if you own certain mutual funds or certain investments that have currency risk to them, that can completely offset gains in
We've only got about
stocks.
30 seconds left. Weigh in, Jonathan, because I want to ask you about housing.
Housing is driven by overall household wealth. Wages are still stagnant.
Exactly. You've got first-time home buyers that are not getting into this market. You've got new home construction that's not going on. Where is the concern? Is it the wages still being flat, that people are still reluctant to get too deeply back in?
And lower energy prices will certainly help Costco and Target and Walmart. People aren't buying homes because oil is down.
We're going to have 2.5 to 3% GDP growth this year, but we still have a significant issue with wealth distribution and income inequality. It's just the way it is right now.
Barry Glassman, final word. Usually I give it to Jonathan Aberman. Today I'm giving it to you. 10 seconds.
Diversify. We don't know exactly what's going to happen, but I agree with Jonathan. Volatility is here to stay.